You're one of the successful people that gets these huge tax bills. It's almost like they are gaslighting you into thinking that trying to save money in taxes is immoral. But the reality is if you save money in taxes, it just means that you and your family will have more financial security. So for many people, saving money in taxes can make the difference between being able to invest in their education, being able to buy a house, being able to pay off their credit card debt, and being able to pay off their medical debt. It also can help you to just have a better quality of living. You can afford your groceries, live a healthier lifestyle, reinvest into your health. As a reminder, saving money in taxes is not immoral. If you do save money in taxes, you can put that money towards great use. Is your CPA working for you, or is he working for the IRS? In today's video, I'm going to explain everything that you need to know to figure out the answer to that question. I'm also going to answer a question from one of my subscribers at the end of this video, so be sure to stick all the way to the end. Without further ado, let's dive in. Now, I know when some of you saw the title of this video, you were probably thinking, what in the world does this even mean? Why would my CPA be working for the IRS? After all, I'm paying him to prevent me from paying them. But here's the truth. Not all CPAs are equal, and not all of them provide the same quality of services. And unfortunately, a huge percentage of them are leaving money on the table for taxpayers, which prevents you from optimizing your tax savings. If your CPA is failing to optimize your tax savings, whether intentionally or unintentionally, then he or she is working for the IRS. This is because he or she is helping the IRS to get more of your money as opposed to helping you keep more of your money. This is a major problem. Just imagine this scenario. You made $1 million per year and you worked with your CPA to get your taxes done. Your CPA comes back to you and said he did everything he could, but you're still going to owe $300,000 in federal taxes. You believe that he is right, so you cough up the $300,000 to Uncle Sam and you go about your life. However, a few months down the line, you get a second opinion from a different tax professional who tells you that there were actually multiple advanced tax strategies that you could have used to reduce your tax bill from $300,000 all the way down to $100,000. So, in this scenario, your CPA, who was supposed to be helping you with your taxes, actually caused you to give up an additional $200,000 to the IRS when you could have kept that money to save in your bank account, or better yet, spend for yourself and your family on investments. Just imagine how frustrating this would be. The sad truth is that this situation plays out for millions of taxpayers every single year. They think that their CPA has their best interest at heart and that he's going to help them or she's going to help them to maximize their tax savings. But in the end, their CPA ends up helping the IRS to get more money as opposed to helping you. This is what I mean when I say that your CPA might be working for the IRS. If you suspect that your CPA is working for the IRS and not you, then this could be costing you tens of thousands or even hundreds of thousands, hell, even millions of dollars per year in extra payments that didn't need to go out. Here are some signs that your CPA is working for the IRS. If you're currently unsure whether your CPA might be working for the IRS, then you need to know what the signs are that could indicate that he or she is working for the IRS and not working in your best interest. Here are some of the top signs that can mean that your CPA is working for the IRS. Number one, they tell you that you have already maxed out all of your deductions even though you still owe a huge tax bill. Number two, they only meet with you once or twice during the tax season to fill out your forms instead of meeting with you throughout the entire year to help you implement tax strategies all year long. Number three, they're very dismissive of your ideas to save money in taxes and come up with reasons why they won't work instead of helping you find out ways to make them work. And number four, they tell you that you should be grateful to pay high taxes because it means that you're successful. You're one of the successful people that gets these huge tax bills. This is the worst one of them all, in my opinion. It's almost like they are gaslighting you into thinking that trying to save money in taxes is immoral. But the reality is if you save money in taxes, it just means that you and your family will have more financial security. So for many people, saving money in taxes can make the difference between being able to invest in their education, being able to buy a house, being able to pay off their credit card debt, and being able to pay off their medical debt. It also can help you to just have a better quality of living. You can afford your groceries, live a healthier lifestyle, reinvest into your health. As a reminder, saving money in taxes is not immoral. If you do save money in taxes, you can put that money towards great use. Okay, moving on now. Understanding the why. Now that we have covered what the signs are that your CPA might be working for the IRS, let's talk about why they might be doing this. To understand this, you need to know the difference between tax accounting, and tax strategy. Tax accounting and tax strategy almost sound very similar, right? But they're not. They're not the same thing. Let me repeat, they're not. Tax accounting is the process of preparing your tax returns and complying with the tax laws. The main goal of tax accounting is to ensure the tax return is filed accurately without mistakes and that all tax rules have been followed based on US IRS law. Tax strategy, on the other hand, is the process of implementing a wide array of sophisticated tax strategies to dramatically reduce the total tax burden you have. The primary goal of tax strategy is to save money in taxes. Most CPAs primarily focus on tax accounting as opposed to tax strategy. This is why so many of them fail to dramatically help you reduce your tax burden as their clients. Tax accounting is very important in its own right. After all, the last thing you want on your tax returns is a bunch of errors that will lead to an audit and possibly penalties that you have to pay. But unfortunately, most CPAs are simply not trained to do tax strategy, which is where the real tax savings occur. Yes, some CPAs do tax strategy, okay, at a high level, but most don't. So Karlton, if CPAs don't focus on tax strategy, who does? Tax professionals called enrolled agents. Those are the ones who focus specifically on tax strategy. Enrolled agents are masters of tax strategy. I'm an enrolled agent. Enrolled agents are also known as licensed tax strategists. If you want to maximize your tax savings, you should strongly consider having an enrolled agent a part of your team. A good enrolled agent will know hundreds of different tax strategies that you could potentially utilize to help you save money on your taxes. Oftentimes, CPAs are completely unaware of these tax strategies that enrolled agents use, or even if they have heard of these strategies, they may have no idea how to actually implement them correctly. Another thing that you will want to consider when you're thinking about your CPA's performance in regards to, saving you money in taxes, is that their job is significantly easier if they don't have to try to save you money in taxes. Let me repeat. Imagine that, you're a CPA. Do you think your job would be easier or harder if you had to focus on tax strategy in addition to tax and accounting? Of course it would be, right? It would be harder for you if you had to focus on both as opposed to just doing one. So if your CPA can avoid having to try to do tax strategy, it could potentially save them an incredible amount of time during tax season and make their lives easier. A lot of these people would much rather just fill out your tax forms as opposed to talking to you in email and going back and forth over the IRS revenue code, which is tens of thousands of pages long, to try to find additional ways for you to save money on your taxes. It's also safer for them to stick to what they're good at, which is tax prep and tax compliance and bookkeeping. But here's the problem it poses. What is safer and easier for your CPA is actually a heck of a lot costlier for you. Because while your CPA might succeed in filling your tax returns correctly and managing your books correctly, he or her neglects to do tax strategy. So you're missing out on massive amounts of tax savings year over year. How serious of a problem is this? I want to give you guys an example of how serious of a problem it can be if your CPA is working for the IRS. I'm going to quickly tell you about a story about Tyler Perry, the billionaire actor and media mogul who is famous for his appearances in movies like Medea Goes to Jail, Gone Girl, Vice, Why Did I Get Married Too, and all those other movies he does. But a few years ago, Tyler Perry revealed that he was audited by the IRS. The process took 3 years, and it cost him hundreds of thousands of dollars to comply with the IRS. During the audit, it was actually revealed the way that Tyler Perry's CPAs handled his taxes actually caused him to overpay in taxes by $9 million. This is definitely a case where CPAs were working for the IRS. They got the IRS an extra $9 million of Tyler Perry's money. Tyler Perry learned his lesson from this whole experience. After he found out how much money he lost because of his accountants, he fired all of them. As you can see, if your CPAs are not prioritizing you, then it can be incredibly costly. If you want to learn more about this situation with Tyler Perry, check this video out right here. I did a whole explanation of his entire situation at length. But no disrespect to CPAs. I also just want to say this. I'm not disrespecting CPAs. This is not the goal of this video. Many CPAs are incredibly skilled, and the services that they provide are extremely valuable. After all, our tax code is so complicated in America that complying with tax law and getting all the forms filled out correctly can be a massive challenge, which is why I love my CPA. All that I can say is that it doesn't make sense to see a dentist when you need a heart surgery. It doesn't make sense to see a CPA when you really need an enrolled agent. And for a lot of you watching this video, it's going to make more sense to work with both a CPA and an EA. There's no rule that says you can't have both. Remember that. Okay, Now, as promised, I'm going to answer a question from one of my subscribers. This is something I've been doing for about 6 months now. But first, I want to remind you guys, the Tax-Free Wealth Challenge is just around the corner. It starts March 10th through March 14th. You have to buy a ticket. The event is one of the largest digital tax conferences in the world, bar none. Over those 5 days, I'm going to be your teacher. I'm going to teach you all the most advanced tax strategies I know. These tax strategies can literally bring your tax bill all the way down to zero if you apply them. If you want to sign up, the link is in the description. We will sell out of tickets. Now back to the question. The question was asked from Klumpkin1012 on my It All Starts With the LLC video. Question was, Karlton, in a partnership LLC, can both members' tax liability be paid from the LLC account, or do they need to be paid from both members' personal draw accounts? This is up to your own discretion. What many partnerships will do is have a separate checking account to cover taxes. You will receive a K-1 that goes to your individual tax returns, and your partner will receive a K-1 that goes to his individual tax returns. However, your partner may have a different tax bill than you would because your partner may be married, may have other sources of income. This is why sometimes the partners will decide to hold a separate account strictly for taxes that's split 50-50 amongst the partners, and then any additional tax that has to be paid is left up to your own discretion. If you have any questions around how to handle your partnership, or if you want help structuring your partnership agreements, be sure to click on the links below. We would be more than happy to schedule a call with you and help you with your tax planning for 2025. My name is Karlton Dennis. If you like this video, do something for me. Like, comment, subscribe. I will see you all on the next video. Cheers.